maiden press briefing of our brand new governor of the Central Bank of Nigeria, Mr. Godwin Emefiele. Without much ado, it is my honor and special privilege to introduce the governor and hand him over to you to deliver his address. Mr. Governor, sir.
Yeah. Thank you very much. Good morning, ladies and gentlemen. Good morning, distinguished members of the press. You are welcome to this press briefing. I welcome you to this press briefing this morning. Having assumed office only 2 days ago as the 11th governor of the Central Bank of Nigeria, I consider it expedient to hold this interaction with you today to unveil my vision for the Central Bank of Nigeria. I'm indeed delighted to share my ideas on creating a central bank that is professional, a central bank that is apolitical and people-oriented, a central bank that dissipates its energies on building a resilient financial system that can serve the growth and development needs of our beloved country, Nigeria. Before I do so, however, let me sincerely acknowledge the excellent work that the bank has done to achieve financial system stability, low inflation, exchange rate stability, an efficient payment system, and a consistent monetary policy in the last couple of years. It is indeed a testimony to this remarkable work that no depositor lost money in any Nigerian bank in the wake of the global financial and economic crisis experienced during the period of 2007 to 2009. Inflation is now at a 6-year low, the exchange rate is largely stable, and monetary policy has provided consistent guidance to the financial community in particular and the country in general. To put this speech in proper perspective, ladies and gentlemen, I will first present the general context in which we are operating today, including current macroeconomic conditions, financial system overview, and the key policy stance of the central bank. Thereafter, I will present and briefly discuss my agenda. The macroeconomic context. In contextualizing the domestic macroeconomic environment in the light of the global economy, permit me to state that acute risks in the global economy have gradually decreased but not totally dissipated. Global growth is projected to strengthen from 3% in 2013 to 3.6% in 2014. This is principally due to the reduction in fiscal tightening and continuation of highly accommodative monetary policy in a number of advanced economies, as well as strong exports to the advanced economies from emerging markets and frontier economies. In the United States, real gross domestic product grew by 1.9% in 2013, a deceleration from 2.8% recorded in 2012. However, a downturn in exports and private investment led to an annualized 1% contraction in US GDP during the first quarter of 2014, which is the country's worst economic performance in 3 years. Policy actions over the past year have addressed important tail risks and stabilized financial markets in the euro area, resulting in an expected growth of about 1.2% in 2014. However, lingering financial fragmentation, tight credit conditions, and high corporate and sovereign debt burdens remain key downside risks. In Japan, private investment and exports are expected to strengthen, especially in the face of substantial depreciation in the yen over the past year. The economy, which expanded by 1.5% in 2013, is projected to grow by 1.4% in 2014. China is projected to expand by about 7.5% in 2014, a modest decline from 7.7% recorded in 2013. The forecast for 2014 is predicated on the assumption of reduced credit growth and a rebalancing of domestic output. Growth in sub-Saharan Africa remains robust and is expected to rise from 4.9% in 2013 to 5.5% in 2014. This expansion expectedly reflects dividends of large mega projects in infrastructure, in natural resources enclaves, as well as bountiful agricultural production. Relative to both global and sub-Saharan Africa growth strategies, the Nigerian economy performed appreciably well over the last 7 years. Here I'm talking about between 2007 and 2013. During the period, the economy expanded by an average of 7%, while sub-Saharan Africa's real GDP growth averaged 5.5%. In the fourth quarter of 2013, Nigeria's real gross domestic product grew by 7.7%, mainly driven by an 8.8% growth in the non-oil sector. For fiscal 2013, the economy grew by 6.9%, with the non-oil sector providing 8.1% backbone to the strong growth. Owing to the tight monetary policy of the bank, coupled with improved food harvest, inflation moderated to a 6-year low of 7.9% at the end of April of 2014. Debt to GDP ratio fell to 11%, while foreign exchange reserves stood at $37 billion as at 27th of May 2014. This external reserve level could finance about 8 months of imports and compares favorably with the external reserves of many peer countries. As at the end of April of 2014, year-on-year private sector credit increased by 26.4%, reflecting strong appetite by the banking system to catalyze the real economy. Over the last 4 years, the country attracted over $22 billion in foreign direct investment, making Nigeria one of the top FDI destinations on the African continent. Results from the latest job creation survey by the Nigerian Bureau of Statistics indicate that the private sector posted a significant share of 1.2 million jobs created in the country in 2013. While this achievement is laudable, it clearly suggests that we need to do more to cater for existing job seekers as well as for new entrants into the labor market. A brief overview of the Nigerian financial system. The Nigerian financial system has undergone several years of critical reforms designed to position it as Africa's financial hub. These reforms have produced a financial landscape characterized by large and strong banks, an efficient payment system, and improved financial infrastructure. For instance, the average capital adequacy ratio of banking systems stood at 16.7% by the end of March of 2014, higher than the global threshold of 10%. At the end of March of 2014, average Tier 1 capital to risk-weighted assets stood at 15.4%, while the industry non-performing loans ratio decreased from 34.5% in November of 2010 to 3.8% as at the end of March of 2014. The central bank's payment system initiatives, such as the payment terminal aggregator and standardized T+1 settlement, have led to a significant reduction in transaction costs and currency management costs. The cashless policy is gradually entering the next phase of implementation, which has been scheduled for July 1, 2014, while the mobile money initiative has continued to enhance financial inclusion, with the number of unbanked public declining from 46.3% in 2010 to 37.9% in 2013. In terms of monetary aggregates, broad money supply, M2, rose by 1.9% in April of 2014 over the level at the end of December of 2013. At an annualized growth of 5.8%, M2 was below the growth benchmark of 15.5% for 2014, but consistent with the tight stance of monetary policy. The increase in money supply reflected the growth in net domestic credit of 1.6% in April over the level of at the end of December of 2013. At an annualized growth of 4.9%, growth in NDC was lower than the provisional benchmark of 28.5% for 2014. Money market interest rates moved in tandem with the tight monetary policy stance and the persisting environment of excess liquidity. Thus, at the end of April of 2014, the average interbank call and open buyback OBB rates stood at 10.5 and 10.6% respectively. The equity segment of the capital market has continued in recovery territory since the global financial crisis. Relative to the end of March of 2014, the all-share index rose by 0.7% on May the 16th, while market capitalization remained strong at 12.85 trillion naira. Key policy stance of the central bank. Since 2012, the bank has maintained a tight regime of monetary policy, with monetary policy rate MPR and the cash reserve requirement CRR mostly remaining unchanged at 12%. The CRR on public sector deposit was however raised to 50% in July of 2013 and subsequently to 75% in March 2014, when the CRR on private sector deposits was also adjusted upwards to 15%. This was to address the liquidity effects of the Federation Account Allocation Committee's statutory allocations to the three tiers of government and the redemption of AMCON bonds towards the end of 2013, the effects of which lingered into 2014. The CBN's exchange rate policy is based on the managed float regime that allows a movement of plus or minus 3% around the midpoint of the Naira-dollar exchange rate of 155 naira to the dollar. Whenever justifiable, the bank intervenes to offset pressures on the exchange rate and restores stability in the value of the Naira. These policy stances have served the bank well since they have properly anchored expectations, created policy certainty in macroeconomic management, while offering a window of flexibility to respond to new information and developments globally as they emerge. However, there exists much room for improvement in the policy environment. Having provided you with the context in which we will be operating in the rest of the paper, I shall be discussing some of the preliminary ideas on elements of the reforms that we will be pursuing at the Central Bank of Nigeria going forward. Our vision to create a people-centered central bank. The vision of the Central Bank of Nigeria is to be the model central bank, delivering price and financial system stability and promoting sustainable economic development. This vision draws inspiration from our understanding of the multiple mandates of the bank to pursue both price and financial system stability, as well as provide complementary developmental functions by creating an environment for Nigerians to live better and more fulfilled lives. Rather than being competing goals, as some may argue, these mandates are truly complementary. In fact, price stability can rarely be adjudged a goal in itself, except cast against the ultimate objective of improvement in the quality of life of our people. Price stability therefore remains a cardinal contribution, indeed a cornerstone to the ultimate goal of economic development. I believe that reasonably stable prices provide a catalyst for rational consumption and investment decisions and for orderly economic progress. That is why throughout the most of economic history, periods of price and financial system stability have coincided with economic growth and development. In order to realize Central Bank of Nigeria's vision, therefore, I believe we must start with championing policies that promote sustainability of our hard-earned macroeconomic stability. Macroeconomic stability. Monetary policy. On monetary policy, we shall pursue a gradual reduction in interest rates. A comparison of selected macroeconomic aggregates from some emerging market countries, including South Africa, Brazil, India, China, Turkey, Malaysia, indicate that Nigeria has one of the highest treasury bill rates. Such high rates create a perverse incentive for commercial banks to simply buy virtually risk-free government bonds rather than lend to the real sector. To enhance financial access and reduce borrower cost of credit, we will pursue policies targeted at making Nigeria's treasury bills rates more comparable with other emerging markets, and by extension, pursue a reduction in both deposit and lending rates. While a reduction in deposit rates will encourage investment attitudes in savers, a reduction in lending rates would make credit cheaper for potential investors. The bank would also begin to include the unemployment rate as one of the key variables considered for its monetary policy decisions. In the interim, we would continue to maintain a monetary policy stance reflecting the liquidity conditions in the economy, as well as the potential fiscal expansion in the run-up to the 2015 general elections. Exchange rate policy. Our key goal under exchange rate policy will be to maintain exchange rate stability. In view of the high import-dependent nature of our economy and significant exchange rate pass-through, a systematic depreciation of the naira would literally translate to considerable inflationary pressure with attendant effect on macroeconomic stability. Therefore, under my leadership, the bank will continue to focus on maintaining exchange rate stability and preserve the value of the domestic currency. We will sustain the managed float regime in the management of the exchange rate, as this will allow the bank to intervene when necessary to offset pressures on the exchange rate. To support this strategy, we will strive to build up and maintain a healthy external reserve position and ensure external balance. There is no doubt that reducing interest rates and maintaining exchange rate are very daunting twin goals. However, the CBN would work assiduously with all stakeholders to devise countervailing measures that will ensure that these goals are mutually achieved. Financial system stability. We hope to sustain the effective management of potential threats and avoid systemic crisis. The core of my vision is to effectively manage potential threats to financial stability and create a strong governance regime that is conducive for financial intermediation, innovative finance, and inclusiveness. In this regard, we hope to anchor on two main pillars: managing factors that create liquidity shocks and zero tolerance on practices that undermine the health of financial institutions. In order to achieve these goals, we would, 1, work with the relevant stakeholders to aggressively shore up reserves. We hope to engage the fiscal and political authorities as well as other stakeholders to improve our policy buffers, which will further create space for the bank to implement monetary policy using its limited instruments. 2, we would enhance the bank's supervisory purview over the banking system as well as strengthen macroeconomic prudential regulation by improving supervisory diligence, ethical standards, as well as highest level of professionalism in carrying out on and off-site supervision activities. 3, we would strengthen risk-based supervision mechanism of the Nigerian banks to ensure overall health and banking system stability. To that end, banks shall be enjoined to perform remedial actions where weaknesses are observed, in the risk-based examination reports so as to avoid further build-up of non-performing loans. Where the banks proffer inadequate remedies, the central bank shall advance its own solutions and insist on compliance. 3. In the light of the size of the economy following the rebased gross domestic product, the trigger thresholds from a macro-prudential perspective are no longer adequate. In due course, the central bank will consider and announce measures to effectively address this anomaly. 4. We shall pursue a zero-tolerance policy on fraudulent borrowers. We will collaborate with commercial banks to significantly improve the credit culture in the Nigerian banking system. The Central Bank of Nigeria's focus will be directed at serial debtors who access loans from different banks and default on all of them even when they have the means to pay. Going forward, the Central Bank of Nigeria will work towards reducing the effect of information asymmetry in the credit market. In this regard, we shall do the following. A. Enhance the operation of credit reference bureaus. B. Establish secure transaction and national collateral registry. C. Strengthen the sanction system to include blacklisting of companies and individuals that have been found to be serial loan defaulters. Indeed, these names will be circulated in the banking system to guide banks in identifying bad borrowers and denying them access to credit in the banking system. D. We will implement stringent loan provisions and penalties for banks that lend to blacklisted persons and companies. E. We would intensify our collaboration with relevant agencies and in particular the Federal Ministry of Justice to strengthen banks' ability to enforce contracts and recover matured debts. F. We will renew vigorous advocacy for the creation of commercial courts for quick adjudication on loans and related offenses. And G. We would establish a national credit scoring system that will improve access to information on borrowers and assist to make good credit decisions. Banking supervision. Our take on banking supervision will be to work towards a better risk-based supervision framework. This will be achieved by training sector-specific bank examiners. For example, while the banking industry has excessive concentration on oil and gas, loans, and other sectors, the central bank does not have the expertise to analyze and monitor the risk inherent in these credits. In other words, every examiner is a generalist. In connection with the above, specialization will help reduce an increasing reliance on outside consultants, ensure that confidential supervisory information are protected, and guarantee a staff depth that can generate robust in-house data to help senior central bank officials prepare adequately for public engagement. The payment system. We hope to better align the cashless policy during our tenure. This policy was introduced in 2012 with pilots now completed in Lagos, Kano, Anambra, Abia, Rivers, and the FCT. The policy is now expected to go nationwide on July 1st, 2014. Over the course of the pilot, we have become aware of complaints by customers, particularly regarding the charges being imposed on cash deposits. This has resulted in customers devising various means to avoid the charges through opening of multiplicity of accounts and other disingenuous behavior, all aimed at undermining the objective of this policy. Given these outcomes, and to better reflect our goal of having more cash under our control, all charges on deposits by customers of banks are hereby stopped with immediate effect. Charges on withdrawals, in view of their eventual elimination, remains sustained at the current 3% for individual transactions exceeding 500,000 naira and 5% for corporate transactions exceeding 3 million naira. Currently, these fees go entirely to the commercial banks. However, going forward, the central bank shall determine what percentage of these fees on excess drawings by customers that will be redeemed by the banks, while the rest shall be remitted to the Central Bank of Nigeria. Let me now turn to the second aspect of my vision, which centers on development banking. For quite some time, the dominant school of thought regarding central banking was that focusing on low inflation will eventually lead to greater growth, increase in employment, generating activities, and poverty reduction. However, early and recent evidences of central banking in places such as the United States, England, Japan, and France indicate that supporting selected economic sectors using direct methods of intervention have been essential tasks of their central banks. As Epstein in 2005 encapsulates, virtually all central banks, including the Bank of England and the United States Federal Reserve, have used direct means to support economic sectors. And this has not simply been a matter of historical aberration, but rather it has been an essential aspect of their structures and behavior for decades on end. In particular, a crucial role for both the Bank of England and the Fed has been to promote the financial sectors of their economies, and especially to support the international role of their financial services industries. They have done this by using subsidized interest rates, legal restrictions, direct credit, and moral suasion to promote particular markets and institutions. Moreover, at times they have even oriented their own overall monetary policy towards promoting the development of these particular economic sectors. As I have shown in the section on recent macroeconomic developments, Nigeria has witnessed impressive GDP growth rates over the past 7 years. Yet, there is an absence of a corresponding reduction in the unemployment rate in Nigeria, which has risen to 23.9% in 2012 relative to 13.9% in 2000. Particularly worrisome is the rate of youth unemployment, which stood at 54% in 2012. With an annual addition of 1.8 million Nigerians to the labor pool, the central bank cannot afford to sit idle by and concentrate only on price and monetary stability. Additional measures will be required towards identifying productive sectors of the economy and channeling credit towards these sectors, while imposing proper monitoring and performance measures in order to ensure that the goals of increased employment and poverty reduction are attained. This will require a review of the bank's development finance program, the participatory agencies responsible for the disbursement of funds, improving our monitoring capacity, and developing performance targets relevant to our focus on generating employment and poverty reduction. To be effective, the measures taken by the bank will not work in isolation. We will work with the fiscal authorities in reducing other structural distortions to productive growth, as this will enhance the potential impact which enhanced access to credit will provide in stimulating growth and employment generation. Our agenda for development finance. The core principle here is that the Central Bank of Nigeria will act as a financial catalyst by targeting predetermined sectors that can create jobs on a mass scale and significantly reduce our import bills. The Central Bank of Nigeria will deploy developmental initiatives to create an enabling environment with appropriate incentives to empower innovative entrepreneurs to drive growth and development. It is important to stress here that the Central Bank of Nigeria will not be targeting individual companies but rather specific sectors. We would establish rules and criteria that create a level playing field so that anyone who fairly qualifies can benefit from these schemes. Some of the central bank's developmental functions will include credit allocations and direct interventions in key sectors of the Nigerian economy such as power, agriculture, medium and small-scale industries, oil and gas, and the health sectors. While playing an active developmental role, the Central Bank of Nigeria will not only operate within the law and its mandate, but will also be transparent about what it believes as strategic and appropriate interventions. The new framework for funding SMEs. Funding for SMEs in Nigeria has largely been viewed from a social development perspective with the goal to reduce poverty through job and wealth creation. This has put the development of the public sector squarely in the hands of the government with mixed results. Going forward, we propose a business approach to funding SMEs which requires the strong involvement of the private sector. The new framework proposed will combine the profit motives of the private sector and the development objectives of government. It proposes a structure that enables the government to leverage the project selection and credit analysis processes of private sector investors who will place more of their resources at risk in funding the SMEs. At the moment, the Central Bank of Nigeria has a number of initiatives, including the 220 billion naira to finance small and medium-scale enterprises with specific focus on women entrepreneurs and to be administered through microfinance banks owned either by state governments and or private organizations. While the private sector invests more of their risk capital in the selected companies, Central Bank of Nigeria's funds will focus on resolving challenges such as access to collateral, enterprise development support, development of a nationwide credit scoring system, and etc. Aside from this new collaboration with the private sector, the CBN will also design a program for our fellow citizens who need as low as 50,000 naira loan without collateral through registered and accredited local cooperatives. We shall encourage venture capital companies and business angels to fund SMEs and invite the bankers committee to play a more active role in supporting the SMEs. The agricultural sector. The Central Bank will revisit the goals and implementation of our intervention programs in the agricultural sector in order to ensure that high value addition is obtained from funds provided. Interventions in the sector will now be driven towards improving productivity in areas with high domestic demand where opportunities exist to improve domestic supply, such as rice, fish, wheat, and sugar, and conservation of foreign exchange. These four commodities constitute a huge proportion of our food import bill, which currently stands at about 1.3 trillion naira annually. The Central Bank of Nigeria would facilitate the creation of an ecosystem that will identify and link various local producers and processors with major importers and selected products. With the expected increase in local production, identified major importers will be encouraged to act as off-takers to local producers. For example, between 2009 and 2013, the CBN's Commercial Agricultural Credit Scheme has disbursed a total of about 16.2 billion naira to 12 rice producers who have managed to meet about 10% of national consumption. We believe that we can scale up this amount to enable these producers meet a much higher share of our national consumption, thereby reducing our import needs for importation of commodities, such as rice. Towards this end, a substantial percentage of the Commercial Agricultural Credit Scheme will now be targeted at the identified commodities. while the loan limit under the Agricultural Credit Guarantee Scheme is now increased to 50 million naira to expand the resources available to small agricultural projects. This scheme is intended to reward good borrowers with more loans and encourage importers of the same product to reduce their demand for foreign exchange, thereby reducing the bank's sale of foreign exchange and thus building the stock of our external reserves. The power sector. Given Central Bank of Nigeria's mandate to develop and implement various policies, programs and schemes aimed at the effective, efficient and sustainable delivery of financial services to special sectors of the economy, there is an important role the central bank must play to ensure the success of the power sector reforms. The corresponding effect of the GDP that could occur as a result of improvement in power sector cannot be overstated. How then can the central bank add value in the power sector? While these plans still need to be fully developed, permit me to share broad outlines. We will facilitate investment in key parts of the value chain by providing funds at concessionary rates to targeted investments in the power sector. We would encourage investment in gas to power infrastructure to improve the reliability of supply of gas to the existing and new power plants. We would also support investment in renewable energy in rural areas through matching fund schemes and providing first loss guarantees. The oil and gas sector. Although Nigeria produces millions of barrels of crude oil per day, the importation of refined petroleum products alone consumes about 35% of our national import bill. The CBN will support efforts at domesticating our oil and gas resources to ensure that much more of these resources are produced locally and used here in Nigeria. This will stimulate inclusive growth, create jobs, and reduce the pressures on the exchange rate occasioned by the demand for import of finished petroleum products. These initiatives will be pursued in collaboration with the Federal Ministry of Petroleum and Natural Resources, who set the core priorities for the sector. Also, any initiatives proposed will need to be aligned with the policy intent of the PIB. With this in mind, the central bank will, 1, contribute to policy development. In recognition of the fact that one of the sticking points in the passage of the PIB is the proposed fiscal regime, we will play an active role in working with the Ministry of Petroleum and Natural Resources and other stakeholders to secure a win-win outcome for the sector. The upstream investment incentives. To reduce the losses in the amount of produced crude that is officially sold, we will support initiatives to metering at ports and secure pipelines. Working with the lead ministry, we will work at investment incentives that encourage local Niger Delta-based SMEs to play an active role in metering services and pipeline protection technologies. Incentives for FDI in upstream. We recognize that there is a significant requirement for investment in the upstream sector, especially for the federal government-owned component of upstream joint ventures. They currently struggle to match the investment in infrastructure provided by the IOC partners. Alongside the Ministry of Finance and the Ministry of Petroleum and Natural Resources, we will support efforts to secure this investment. We will explore how this can be done through international capital markets. This will require looking at the current JV structures and ensuring that our proposals sit alongside the PIB proposals. Support for refineries and pipeline construction. We will support the Ministry of Petroleum and Natural Resources by looking at investment in incentives in refining and promoting investment in the construction of much-needed gas pipelines. We will also support the establishment of small-scale modular refineries that can serve some of our domestic markets. We will consider giving priority to the main arteries to the gas-fired power plant. The health sector. Given the myriad of issues facing this sector, which has led to a huge bill of foreign exchange used for medical travels overseas, the CBN intends to play a facilitating role by unlocking the potentials that exist for the private sector to invest in various points along the health care chain, including hospital services, health insurance, pharmaceuticals, supply chain, and financing. This window of opportunity has already led private sector to establish an institutional platform for health known as the Private Sector Health Alliance for Nigeria, PHN, with the support of the government. The CBN will explore opportunities for partnering with the PHN to galvanize the private sector into playing a more active role in health sector. The bank will maintain a keen interest in supporting the development of institutions, create an enabling environment to trigger private sector investment, and curb growing trends of medical tourism. Conclusion. In concluding, the sole objective of this briefing is to place before you our plans to move our country forward. These ideas can be summarized as follows. 1. Pursue a gradual reduction in key interest rates and include the unemployment rate in the monetary policy decisions. 2. Maintain exchange rate stability and aggressively shore up foreign exchange reserve. 3. Strengthen the risk-based supervision mechanism of Nigerian banks to ensure overall health and banking system stability. To that end, banks shall be enjoined to profile remedial actions where weaknesses are observed in risk-based examination reports so as to avoid further build-up of NPLs. And where the banks profile inadequate remedies, we repeat, the central bank shall advance its own solutions and insist on compliance. 5. We shall build sector-specific expertise in banking supervision to reflect loan concentration of the banking industry. 6. In view of the inadequate trigger thresholds from a macro-prudential perspective, consider and announce measures to effectively address this anomaly. 7. Abolish fees associated with limits on deposits and reconsider ongoing practice in which all fees associated with limits on withdrawals accrue to banks alone. 8. Introduce a broad spectrum of financial instruments to boost specific enterprise areas in agriculture, manufacturing, health, and oil and gas sector. 9. Establish secure transaction and national collateral registry, as well as establish a national credit scoring system that will improve access to information on borrowers and assist lenders to make good credit decisions. 9. Build resilient financial infrastructure that serves the needs of the lower end of the market, especially those without collateral. Renew vigorous advocacy for the creation of commercial courts for quick adjudication of loans and related offenses. We must by now have been tired of hearing people talk about potentials of Nigeria. Now is the time to live that dream. I truly believe that working together, we can achieve our goals and give Nigerians the chance to live longer, better, and more fulfilled lives. Thank you for listening. Good morning.
Thank you, Mr. Governor. Distinguished ladies and gentlemen, my colleagues, the governor will take a couple of questions. We want you to come around here. If you have any questions, just say your name.
Mr. Governor, and welcome, of course, as the new Central Bank Governor. I'm Nancy Ilo. I anchor the Money Show.
Hello.
I'm Nancy Ilo. I'm the presenter of the Money Show on African Independent Television, AIT. Listening to your speech, a long one at that, and it seems as if you are going to be, I would say, unwinding the magic wand. You've actually come with the magic wand. When do we begin to say gradual reduction of interest rates? How possibly will poverty reduce? Because according to the National Bureau of Statistics now, perhaps poverty is at 60%, unemployment at about 23.9%. You also talked about specific sectors where the central bank will be concentrating on. Of course, we know that central bank has been concentrating on sectors such as aviation, power, agri, and the likes of them. You also mentioned health. I also want to look at perhaps an area you didn't touch on, the PMIs, the primary mortgage institutions. You didn't talk about that. Is there any vision for you concerning housing? Because we know we have about 80 million housing deficits in Nigeria. What will you do or what will the central bank do to be able to strengthen the housing sector? Because we do know that that sector has enormous powers to push the economy. How would you also, bearing in mind that this is a pre-election year, next year is an election year, how would you begin to get fiscal authorities and perhaps the politicians, because you mentioned that you're going to build a central bank that is apolitical. I actually want to know how you're going to do that, because this is an era, or this is a time of great economic anxiety, and all eyes are on you right now, members and other members of the central bank. Let me just leave it at that for now.
Thank you. My name is Elisha Balakubu. I work for Bloomberg. My questions are 2 and very short. During your screening at the Senate, you did talk about devaluation of the currency will be devastating to the economy. And my question is, how confident are you that the Naira will be able to stay within the current trading band that it is right now? And if it does fall, how will you be willing to devalue, as the case may be? And then secondly, how concerned are you about spending in the build-up to the elections next year? Thank you.
Brand new CBN Governor, sir. My name is Cliff Ayozie. I report for NTA News. So you talked about boosting the nation's foreign reserves. And,
about what?
Boosting the nation's foreign reserves, currently standing at $37 billion US. But we will be silent on the place of excess crude account and the sovereign wealth fund in saving for new generation and investment. Would you want to please enlighten us along that line?
You Governor, sir. Benjamin Umuteme from WFM. I just want to ask, because you did talk about the withdrawals, abolishing the charges. I want to ask, considering deposit, considering what Nigerian banks, are you envisaging the reactions from the banks in terms of resistance? Thank you.
For Vision FM Radio. So I would like to know what you really want to be known for. What will your, because I know Sanusi was for risk management, Soludo was for capitalization. What is your own stand? What will you want to be known for, sir?
My name is Omar Gibra. I work for Bandit. I also want to find out from the governor. For some time now, the CBN has been talking about the strategic agenda of the Naira to redesign the Naira and possibly redenominate the Naira. I want to find out if it's going to be part of your agenda. And secondly, the question of meat. We import a lot of currency to this country. Are we going to strengthen the meat and ensure that almost everything is treated in Nigeria? Thank you.
At the time when I was facing the Senate at my confirmation hearing, it's also a very serious question that I was confronted with by the senators. And indeed, I did make a commitment that yes, we'll work very hard to ensure that that interest rates come down. And in my presentation, what I have done is to show that if we compare our figures in terms of interest rates and loan rates in frontier markets as well as in emerging markets. Here I mentioned Malaysia, China, India, South Africa, Turkey. The study that we conducted showed that our interest rate regime is actually very high. And we will be looking at it. In fact, indeed, we started looking at it. I've had extensive discussions with a committee of governors, and we'll be unfolding various policy measures that I'm very optimistic will eventually lead to the reduction in both deposit rates as well as lending rates. She also asked when and how will poverty reduce. You see, the issue is that when you look at when you look at the fact that today the issue is not just about GDP or by what rate you grow GDP. Today, people are beginning to talk about, or government are beginning to talk about job creation and inclusive growth. And you find out that so many of our people, particularly of the age rate band of between 15 and 30, I would say are unemployed. And that is the band where you have people who are aggressive, who have a lot of energy to work. We would, like I said earlier, we are going to put in place a lot of policies that will support not only creating jobs for them, but also if they want to develop their entrepreneurial skills, we will make it easy for them to access finance. And when you make it possible for them to access finance, obviously what they're trying to do is helping to reduce poverty. In the last couple of years, the Central Bank of Nigeria has been involved granting credits through what I call the Commercial Agricultural Credit Scheme. And I was watching the television a couple of weeks ago, and I saw a state government. And permit me not to mention the name of the government, because so many state governments have done quite well. And on that television, during that television program, we were told that what the government did was that they went to the streets and they carried out what is called an enumeration of people who sell wares on the street, people who sell fish, people who sell sweets, people who provision, just little small traders. They enumerated them, took a survey of these people, and what they did was they went and opened up markets. They segmented those markets in order to ensure that those of us in the middle, those of us, the big men, don't corner those markets. After they had been built, they went to the streets and picked those people from the roads and put them into the market. They allocated those stalls to them. After allocating the stalls to them, through the state microcredit agency, they gave them loans of 50,000 naira each at 9% per annum. And the governor told them, and most of these were women. What did the governor say? He said, look, we are giving you this loan. It's not a grant. It's not for free. Trade with this money. When you trade with this money and you pay it back, we will give you some. I was moved. And indeed, I called the state governor. And I said, Governor, what we will do, we can collaborate with you. We can collaborate with you by even refinancing what you have done so that you can create more of those markets. Now, you can imagine giving 50,000 naira to, say, 5,000 people. That is just a loan of about 250 million naira. That is not much money, but what we're doing through that avenue is reducing poverty, alleviating their lives, and making it possible for them to live a gainful life. Those are the kind of things that we will identify in different parts of the country. Where do we find people, or where do we find government? Where can we find institutions? Institutions that have put in place programs that will support creation of jobs, reducing the level of poverty. As we identify them, what we will do is to collaborate with them, support them, make it easy for them to access finance so that we can reduce the level of poverty. You also talked about the primary mortgage institutions. Yes, indeed, you're very correct. There's a gap there. We will certainly support in fact, Central Bank of Nigeria is also part of the major stakeholders that are working on the mortgage refinancing program. We would aggressively support it. But I believe that there are still a couple of infrastructure we need to put in place. Those kind of infrastructure I'm talking about is where we need to build data bank. A data bank where when you take a loan and you don't pay, you take a mortgage and you don't pay,